What if the world's most powerful financial system survives, not because everyone trusts it completely, but because nobody can fully escape it? The world says it wants to escape the US dollar, but every time panic begins, money runs straight back into it. The US dollar is not just a currency, it is a system, a network, a habit, a structure built deep into global trade, banking, debt, and crisis management. And this is why escaping the dollar is far harder than criticizing it, because the modern financial world does not simply use the dollar, it depends on it. This is the hidden architecture behind global finance, a story about money, trust, debt markets, sanctions, geopolitical power, and why the world keeps returning to the very system many countries claim they want to replace. To understand this, go back to the end of the World War II. Europe was devastated. Much of Asia was damaged. Industrial systems were shattered. But the United States emerged economically stronger. Its factories survived. Its financial system expanded. Its gold reserves became enormous. This created a historic opportunity. In 1944, world leaders met at the Bretton Woods conference. The goal was stability. The world needed a new financial order. Under this system, major currencies would be linked to the US dollar, and the dollar itself would be linked to gold. This effectively placed the dollar at the center of global finance. Now think about what this meant. Countries needed dollars for trade. Central banks held dollars as reserves. The dollar became the foundation of international settlement. This created network effects. The more the system used dollars, the harder it became to operate outside it. Now examine why trust mattered. The United States had massive industrial capacity, large gold reserves, strong financial institutions, deep markets. This created confidence, and confidence is one of the most important forms of monetary power. Now move to 1971. The system faced pressure. Foreign governments increasingly wanted to convert dollars into gold. Gold reserves became strained. Then Richard Nixon made a historic decision. He ended dollar convertibility into gold. This became known as the Nixon shock. Many expected the dollar system to weaken, but something surprising happened. The dollar remained dominant. Why? Because by then, the system had evolved beyond gold. The dollar was no longer backed primarily by precious metal. It was backed by markets, especially U.S. debt markets. Now focus on U.S. Treasury securities. These became the world's preferred safe asset. Why? Scale, liquidity, trust. During crises, investors want safety. They want assets they believe can be sold quickly and reliably. Treasuries became that asset. Now think about the size of global finance. Governments, banks, pension funds, corporations all need safe places to store capital. The U.S. Treasury market became central to this need. This strengthened the dollar system further. Now consider trade. Oil, commodities, shipping, international contracts. Much of global trade became priced in dollars. This created another layer of dependency. Countries needed dollars not only for reserves, but also for commerce. Now look at banking. International banking systems became deeply connected to dollar clearing networks. Large transactions often moved through U.S.-linked financial infrastructure. This increased efficiency, but it also increased American leverage. Now examine sanctions. Dollar dominance gives Washington extraordinary power. If global finance runs through dollar systems, access can be restricted, banks can be pressured, assets can be frozen, trade flows can be blocked. This transformed the dollar into a geopolitical tool. Countries around the world notice this, especially countries facing sanctions or strategic rivalry with the United States. Now consider Russia. After sanctions pressure increased, Russia accelerated efforts to reduce dependence on the dollar. Now look at China. China also seeks alternatives. Local currency trade agreements expanded. Gold reserves increased. Alternative payment systems developed. Now examine Iran. Financial restrictions reinforce concerns about dollar dependence. Many countries now discuss de-dollarization, but discussing it and achieving it are very different things, because replacing a currency is easier than replacing a network. Now focus on network as X again. The dollar system works because everyone already uses it. Trade contracts, debt markets, reserve systems, banking operations, commodity pricing, insurance structures, all connect to the same architecture. This creates enormous inertia. Now think about debt. Many countries and corporations borrow in dollars. This creates dependency. If local currencies weaken against the dollar, repayment becomes harder. This is especially important during crises. Now consider global panic. During instability, investors often rush into dollars, not away from them. This creates one of the great paradoxes of global finance. The dollar system is criticized constantly, yet crises often strengthen it. Why? Because markets prioritize liquidity and trust during uncertainty, and the dollar system still dominates both. Now examine gold. Many countries are increasing gold purchases. Gold provides diversification. It reduces exposure to dollar assets. This is part of a broader de-dollarization trend, but gold alone cannot fully replace global financial infrastructure. Gold is not a large-scale payment network. It is not a global debt market. It is not a modern liquidity system. Now consider alternatives. Some countries promote local currency trade, digital payment systems, regional financial arrangements. These efforts matter, but building trust takes decades. Scale matters. Legal systems matter. Market depth matters. Now compare currencies. A reserve currency needs more than economic size. It requires confidence, reliable institutions, deep financial markets, political influence, military stability, global usage. The dollar system accumulated these advantages over generations. Now think about history. Monetary systems rarely disappear quickly. The British Empire once dominated global finance through the pound sterling, but even after British decline began, sterling remained important for years. Why? Because financial systems persist through habit and infrastructure. The same dynamic applies to the dollar today. Now examine the relationship between military power and monetary power. Global influence supports confidence. Trade security matters. Financial stability matters. The dollar system benefits from broader American geopolitical strength. Now consider energy markets. Oil has long been heavily traded in dollars. This reinforced global demand for dollar reserves. Energy importers needed dollars. Energy exporters accumulated dollars. This strengthened circulation. Now look at central banks. Most central banks still hold large dollar reserves. Why? Because they need liquidity during crises. They need assets accepted globally. Again, the system reinforces itself. Now examine one of the deepest lessons of economic history. Monetary dominance survives not because everyone admires it. It survives because the system remains useful. Even rivals often depend on it. Now consider globalization. Modern trade is deeply interconnected. Supply chains span continents. Finance moves instantly. This increases the value of shared standards. The dollar became one of those standards. Now think about financial crises. During the 2008 global financial crisis, investors rushed into dollars and U.S. treasuries, even though the crisis began in the United States. This revealed the depth of global dependency. Now look at psychology. Markets value predictability. In uncertain times, investors prefer familiar systems. The dollar benefits from this behavioral pattern. Now examine inflation and debt concerns. Critics argue that rising U.S. debt threatens long-term confidence. Others fear excessive money creation. These debates are serious, but alternatives still face their own limitations. Now consider the future. The world may become more multipolar. Regional systems may expand. Alternative payment structures may grow. The dollar's share of global reserves could decline gradually, but replacing the entire architecture is another matter entirely, because the dollar system is not one thing. It is many interconnected systems working together. Debt markets, trade finance, banking infrastructure, reserve assets, legal frameworks, global habits, and habits are difficult to replace at scale. Now return to the central idea. The dollar is not dominant because everyone loves it. It is dominant because the world built itself around it. And systems built over decades are extremely difficult to escape. If you want deep insights into economic history, money, global power, and the hidden systems shaping the world economy, subscribe to The Financial Story. We break down complex financial systems into simple explanations, so you can understand how power really works. Now think about the deep lesson. Currencies are not only pieces of paper. They are trust systems, infrastructure systems, political systems, and geopolitical systems. The dollar became powerful because it embedded itself into the architecture of modern global finance. That architecture still shapes trade, banking, debt, sanctions, and crisis response today. The world talks constantly about escaping the dollar, and at the margins, change is happening. Gold purchases are rising. Alternative payment systems are growing. Local currency trade is expanding. But every global panic reveals the same reality. When uncertainty rises, the world still runs toward the dollar system, because monetary power is not only about economics. It is about networks, trust, liquidity, and dependence built over generations. And until another system can replace all of that at scale, the dollar remains more than a currency. It remains the financial language of the modern world.